Today's video is sponsored by Fastpool, but we'll talk about that later on in the video. What's going on, guys? Welcome to the channel. In today's video, I'm going to be showing you the ICT swing trading strategy for Forex, indices, and synthetic indices. So let's get into the video. We call this the intra-week swing trading strategy. And this is the time frame alignment with the first one, which is weekly, daily, and the H1. Then with the second one, which is weekly, H12, then the H1. Then we come here where we have bias, PD arrays, and entry model. For bias, we only use the weekly. For PD arrays, we use the daily and the H12. That's what we use for our PD arrays. That's the time frame where we look for our PD array before looking for the entry model. Notes: bias. This is the direction of either the monthly, weekly, or daily candle. In this model, we'll be using the weekly. We only look for continuation trades and never reversals. Second, PD array. We use fair value gaps as PD arrays as we want internal range liquidity and draw towards external range liquidity, which is the previous week high or previous week low. Entry model. We have two entry models for this model: unicorn entry model and the FVG plus displacement from higher time frame PD array entry model. For this one, we use more of a breaker / unicorn entry model. It's more of a breaker entry model, which we'll be using. I'll show you. Keynotes: we only trade continuations and never reversals. We trade internal range liquidity to external range liquidity, and we always trade in line with our overall bias. This is the first example. Bias weekly, previous week high. The first one is the previous weekly candle. So the previous weekly candle has to be closing above another previous week's candle with a body close, such that when the current weekly candle opens, it should go down, tapping into the fair value gap on the lower time frame, and then proceeding to move higher towards the previous week's high. PD array, that is the daily or H12 fair value gap. So basically, the current week trades into the range of the previous week's candles fair value gap, that is a PD array, within the previous week's range, the candle range of the previous week. And we look for an FVG, and that's where we'll then drop to the lower time frame and look for an entry model, which is the breaker block. Here you can see we have the fair value gap and we have the breaker block, and as soon as price closes with a body above the body of the breaker, we execute and put our stop loss below the swing low and target 1 to 2 risk to reward. So now let's get over to the charts. Fastpool offers charting tools. These are multiple tools we can use to analyze the charts. Fastpool also offers multi-chart viewing, where users can open multiple trading charts simultaneously. Fastpool also offers indicators, and each chart can have up to 64 indicators. Fastpool also offers chart templates, and you can save an unlimited number of chart templates. Fastpool also offers customizable timeframes. Users can switch between different time scales, such as 1 minute, 5 minute, hourly, daily, and weekly, so as to analyze the market. The customization feature empowers traders to tailor the chart and display what they really need. Fastpool also has a signal service which has rankings, and these display the best and worst performing signal providers on the platform for live and demo accounts. You can filter the signal providers as per your specific needs. Fastpool also has signals. These come from Fastpool and they are for multiple markets. You can choose the market of your choice. Fastpool also shows the signal statistics of these signals from different providers. To check out Fastbook, go to the link in this video's description. Onto the charts. So here we have V50 Volatility 50 index on the weekly chart, and we are going to start with this week's high here. You can clearly see that we closed above the previous week's body right there, and we left a huge wick at the top. So on this candle, on this weekly candle right here, the 1st of December, that's when we start looking for trades higher. So I'm going to drop to the daily so we can look for a PD array. Right there, you can see that's 1 December at 12 midnight, the candle. That's where the day started. So we'll be looking for price to drop lower into a fair value gap. You can see that fair value gap over there. 3 candles left a gap, and we'll be targeting the week's high. Internal range liquidity to external range liquidity. Then we drop to the hourly. In the hourly, you can clearly see that price dropped lower. Yeah, it went a little bit above the open of the daily candle, which is the new week's open, and price dropped lower right there. You can see we did get a breaker there, but it's not high probability for me since we don't have a candle which was broken above. And if you use this breaker, your stop loss would be too large because you have to put your stop loss below the swing low, so it would be too big. So we'll then have to use the following breaker right here. Price came and swept that liquidity, and we got a body close above this breaker, this failed order block. It failed to hold price, and price closed above it right there with a candle close. And then we'll look for longs, and we target 1 to 2 or 1 to 3. I recommend 1 to 2. So there would be our entry at the top at the week's high, and our stop loss would be the swing low. Our take profit would be a 1 to 2. So in this case, it would be 54, right around there. And our take profit would be hit. In this example, on Volatility 101S index of the weekly chart, you can see this week here closed above the previous week with a body close right there. And on the following week, it opened, dropped lower, and pushed further up. On that drop lower, that's where we'll look for opportunity. So let's drop to the daily time frame. You can clearly see that I marked the open of the new week here, which is on 15th of December, and price then dropped into this fair value gap below, 3 candle pattern, and price then came back and tapped the fair value gap and respected it towards external range liquidity. So let's drop to the 1 hour time frame to look for entries. In the 1 hour time frame, you can clearly see we have our open right there, and price went below, went above, below, above, not giving us a clear opportunity to enter trades. The stop losses here were huge. As you can see, we had this breaker right here, but the stop loss would be huge. So we then wait for a clear opportunity, which we got right there. Similar to the previous example, you have to wait for a clear opportunity and enter when it's presented. Our stop loss would be right there, to be right at 9, and our take profit would be 20 at the external range liquidity. You can clearly see the accuracy right there, 9 to 20. That's more than enough. And now let's move on to the next example. On the weekly time frame here, we can clearly see that the previous week closed right there with a body close, and we wait for price to mitigate inefficiencies on the lower time frames in the manipulation stage of the new candle. It's basically a power of 3 model where you open, manipulate, and then distribute lower. So now let's drop to the following time frame, which is the daily time frame. And here on the daily time frame, we can see the new week there started on the 15th yet again and tapped into this fair value gap right there. So let's drop to the hourly time frame to look for entry opportunities. Right here, you can clearly see that we got our entry opportunities right as soon as we close below this breaker candles body there, and our stop loss would be at the highs and take profit at the lows. Let's see if we get a good risk to reward, and indeed we get a nice 1 to 2, actually a little bit more than a 1 to 2. Now let's move on to the next example. Looking at AUDCAD on the weekly time frame, we can clearly see that this candle closed below this candle's low with a body close, so we'll be looking for price to target this low. And here on the 9th of December this week started, and we'll be looking for price to drop as soon as it mitigates an inefficiency inside this candle's range or above it, which is a fair value gap. That's the PDRA we'll be looking for to be mitigated. So now let's drop to the daily time frame to look for the PDRA. And as you can see, as soon as this day started, the new week started, price pushed above. And what do we find above? We find this fair value gap right there. It's an old fair value gap, but we did sweep liquidity above this week's high, and though we invalidated this fair value gap is because we had another one above price, so we can still use that fair value gap since our external range liquidity hasn't been hit. Now we drop to the hourly time frame to look for entries, and as you can clearly see, our entry model presents itself right there for a short position, and we target our 1 to 2. And our 1 to 2 is at that order block. And as soon as price hit our target, it started consolidating. Looking at AUDUSD, we can clearly see that this week here, this weekly candle closed with a body below this candle, and we also had a draw on liquidity here, and price opened here on the 9th of December. So let's drop to the daily time frame. You can see the 9th of December, this is our open. Let me just mark it for you. Ninth of December, our new week open. And if you look here, we had a fair value gap, though it's not that clear for everyone. There's the fair value gap where price reacted from. You can clearly see right there on the 9th of December, price pulled back into the fair value gap there, and it reacted off that fair value gap. So on the H1, that's where we look for what? Our setup, the breaker entry model. Right there, you can clearly see the breaker now. And you take your short position at the low of the breaker right there. There you go. And you target a 1 to 2. And it's around here. That's where you get your 1 to 2, and your take profit would be hit around the new week's open. You see? So this model is quite mechanical and simple to trade. Let me just show you another example, then I'll give you further notes on what pairs to look for these setups in. At Bitcoin right here, we can clearly see that we had this weekly candle which closed above previous week's body highs, which closed above previous week highs with the body close. And when this week we started on the 9th of December started, let me mark the low for you. We then drop into the daily. We can clearly see that there was no fair value gap in this candle's range right here, and below the fair value gap was down there, and price had a lot to go through to go back down there, and we wanted these candles to be respected. So price didn't give a fair value gap below, but it did drop into this week and then push up and gave us a nice fair value gap right there, which price then dropped into on the 13th, and that's when we look for our trades towards the external range liquidity. So in the hourly time frame, we then find a breaker right there below the open. That's what is important. You have to look for trades below the open of the weekly candle, and that's where we buy right there our long positions in that candle's body right there. That's where our buy would be, because we closed above here and price pulled back. Let me mark the week's high. Most likely would have got our trades right there around that level, but let's just use this one since it's the same. So, and our target would be a 1 to 2. There we go, and our target would be hit right there, and price proceeds to trade higher. So which markets does this strategy perform well in? I would recommend you to trade synthetic indices with this strategy, because some of them tend to trade for long periods of time in one direction. As you can see here, you'd be looking for opportunities on almost every week here. Dropping a pullback higher, you still be looking for opportunities, and you still be looking for opportunities right now. Even this week we are looking for opportunities in DAX 900 up index. So to create an account for synthetic indices, check the link in the description, and if you want to learn on how to deposit into synthetic indices, you can DM me. I can give you a quick tutorial on how to deposit into synthetic indices using either cryptocurrency, bank transfer, or direct peer-to-peer. These indices are easier to trade as compared to other markets which are available, because they are not affected by multiple factors such as news, releases, and more. I would recommend you to trade it on the DAX indices, all these DAX 600, DAX 900, and DAX 1500. And I would also recommend Volatility 50, obviously, because you can clearly see why. It trends for long periods of time before reversing, which it will still be trending, for example here. And I would also recommend you to trade this on Australian dollar related pairs, because they are good for swing trades and they present multiple setups, and also on cryptocurrency. Especially in the bull run, you can trade cryptocurrency with this strategy. So if you want to create an account for trading synthetic indices or derivatives, you can check the link in the description. If you have created an account, you can DM me. I have something for you. If you create an account using my link, you just DM me on Telegram and I'll send you the PDF which I created for trading synthetic indices. With that, don't forget to share, like, and subscribe to the channel if you haven't. And for those who subscribe, stay tuned, more content is on the way. Thank you for watching. See you in the next one.